All right. So we have covered the basics on candlesticks. We did some basics on what is that, support and resistance, and we see how do we know what is the price trend going on for a company. All right. You always want to invest in a uptrend company. All right. You don't want to throw your money into a downtrend company. You invest 1K, 10 years later it gives you $10. Okay. We don't want that. All right. Always, very importantly, find a company that has a growing uptrend. So as a fresh investor, as a small cap investor, for you and me, we will always grow our capital faster. Okay. So with that, I'm going to move on to the next topic already. So today I will teach you two indicators. One is called moving average. Second is called RSI. So I will now introduce you the first technical indicators which will help you on your charting. All right. It's called moving average. So moving average, when you see the name, very, very clear already. It's just an average of price for the past defined time frame. Let's say if you have a MA20, right, moving average 20, it means it takes the price of the past 20 days and it average out and give you one of the average price. And why is it called moving average, right? It means that today it will take the past 20 days, right? Tomorrow, it will take the past 20 days of tomorrow, etc., etc., etc. So the price will serve as a moving line. So you will see a trend line that is moving accordingly as the stock goes up or goes down. Okay. So moving average, very importantly, just an average of price of your defined time frame. Why do I say defined time frame again? Remember when I talked about candlestick earlier, each candle equals one defined time frame. So if you are looking at 1 hour chart, one candle is 1 hour. Similar here for moving average. If you are looking at 1 day chart, okay, your MA20 means it's the average of the past 20 days. If you are looking at 1 hour chart, your MA20 is the average of the past 20 hours. If you are looking at 1 minute, it's the past 20 minutes average. Okay, so this is why I say defined time frame. It really depends on when you look at your chart, right? Are you looking at 1 day, 1 week, 1 month, 1 year? All right, the level will be different. And MA, again, you have two types of MA. One is the simple MA, which is just the average of the past 20 days, 50 days, 100 days. And each of the days have equal weightage. Okay, but exponential is what I have been using recently, and I realized is better for you to understand what will be the recent or most up-to-date support or resistance level that is moving. Okay, so exponential, it also is an average of the past time, the price of the past, say 20 days or 50 days, but it will give more weightage to the recent price. So meaning to say the price from yesterday will be more significant compared to the price that it was 20 days ago. And why is this very important, guys? Is because there are many times when you look at MA, right? What is more significant for you to know the level is probably the price that hasn't been a very long time ago. It will probably be 5 days ago. And that 5 days really updates you quickly on your moving average. So you can rely on it better to predict what is a good time to enter or exit. Okay. So EMA, we talk about support and resistance. EMA here, as it is a moving trend line, right? We can actually use this as a dynamic support and resistance level, right? Because it gives you an updated price level. It gives you an update on what is the price trend on a very on a daily or on an hourly basis, right? So EMA, very important. If you use this, right, you basically combine the concept of support and resistance also on price trend. All right, is it clear until now? All right, type in 1 if it's clear. If you have questions, shoot it on the group chat. And if not, I'm going to give you some example on moving average. All right, I will stop here for 10 seconds to let anything fly in. All right, no questions, type in 1. If you have questions, type in your question. Okay, Mandy Han Yang, all right. Okay, no one's coming in. All right, let's continue. Okay, similarly, some examples here for you. Again, this is from TradingView. This chart is Amazon, all right? So Amazon, you can see now I have these 4 colorful trend lines here, all right? And this is basically one of the technical indicators that I will open. It's called EMA 20/50/100/20. What it tells you is basically when I turn on this indicator, it will show me all these 4 charts, all these 4 MA with these 4 color. So green is EMA 20, red is 50, 100, and 200. So for Amazon case, right, you can see that the price, it always adheres or it sticks to EMA 20 for this period of time. Then once it falls through, right, when it touches EMA 100, it actually forms a support here and it bounces back. And it falls back to 100, it bounces back. It falls back to 100, goes up again, falls back, goes up. So the takeaway is this, guys. When you see a stock start obeying or respecting one of the EMA, right, it serves as a dynamic support for you. So for this period of time, you can see Amazon go up. Then when it goes up, right, it's not a good time for you to buy because you know that it will always follow back or fall back to EMA 20. So when you see it touches back to EMA 20, it's probably a good time for you to entry. And it goes up again, it comes back again. You know that it always follows that. It respects this line. So every time it goes up very fast, just don't chase the price. It will always fall back down and it's a good time for you to enter. Okay. But when it breaks this EMA 20, right? Remember when a support is break, it will become a new resistance and we will look for a lower support. So for Amazon case, right, it break through EMA 20, it break through EMA 50 again, and it holds at EMA 100. So for this case, right, EMA 100 becomes the latest support trend line for Amazon. So from this point onwards, EMA 100 rebound, come back to EMA 100, rebound, come back to EMA 100, rebound a bit again, come back to EMA 100, rebound. All right? This is how EMA actually gives you the idea on how you combine support and resistance level together with a trend line. All right? Trend line, you can see clearly EMA 20 moving above 50, 100, and 20. What it tells us, right? It means that the price for the previous 20 days is moving higher than the price compared to the past 50 days, past 100 days, past 200 days. And it's a good signal because when the price is moving higher for, say, the recent 20 days compared to the past 100 days, it basically tells you the price is moving on an uptrend. Okay, I will repeat this sentence. If EMA, say 20, 50, 100, 200 aligns properly like this, right? The shortest period on the top, then sequentially follow until the longest period on the bottom. Like this sui, it will tell you that the price has been moving on a very nice uptrend. Okay, make sense? So this is how EMA gives you the combination, the perfect combination between support, resistance, and also trend line, whether it's trending up, is it sideways, or is it a downtrend. Okay, so this is an example from Amazon. And right now I'm going to stop my share for a while and quickly jump into my, what do you call that? Trading view. And I'll teach you how do you actually turn on this indicator in your trading view, all right? Sorry, let me just refresh my screen for a while. Okay, so this is when you come into trading view, just click chart, ignore anything else, and it will show you your chart, okay? So just now I was explaining that on the first top left will be your stock ticker. Second will be your time frame. You can choose which time you want to look at. Right now it's on a day chart, okay? So each candle represents 1 day, and this is how you change your candles. And I'm not going to touch any of that. I will move straight to the fifth box called the FX, okay? FX, click on that, and we'll pop up this pop-up. So what I want right now, I'm going to add this technical indicator called the EMA, right? Exponential moving average. So simply I'll just type EMA. Okay, so you can see there are a lot of indicators here, right? Built-in is basically the indicators that were built by TradingView, okay? Public library you can use also means some of the users, they build their own technical indicators and they upload here. So it's an open source, it's free. And I will usually pick this EMA 20, 50, 100, 200 because simply by adding this indicator, it will show me 4 lines already. So I don't need to add 4 times EMA. Okay, I will just click on this EMA 20, 50, 100. Oh, let me just log in quickly. Sorry, yeah. Give me a minute. Okay. Let me just remove everything first. All right. Again, click FX, type in EMA. You can also use triple EMA, right? But I just prefer to use this one with the 4 lines. So EMA 20, 50, 100, 200, click on it and close this. And you can see very nicely, it will show you EMA 20, 50, 100, 200. And these 4 colors here, right? It represents the 4 color for your EMA respectively. So on the most left will be 20, 50, 100, 200. And you can customize this color according to your preference, all right? Yeah, so how to customize, just click on setting. You can change the color here. Okay. Yeah, let's say I change EMA 20 to green, EMA 50 to red, EMA 100 to blue, and I will stick with purple for EMA 200. All right, and I'll just click OK, and it's updated here. All right, 20, 50, 100, 200. All right, if you have your computer, you can try this on your TradingView. And yeah, if you don't, you can watch back the recording later and try this yourself. All right, let me share it back to my, I'll pop it back now to my presentation. Okay, anyone has any question? Any question on TradingView? TradingView is basically I do all my technical analysis on TradingView, right? So it's very important. It's a very good place for you to have a free source and try to play around and see how you draw your charts and predict your next entry or exit price. Okay, no questions, so I'm going to continue, all right? Yeah, this is just an example again on Amazon. So green one means that the price follows EMA 20, blue, it follows EMA 100 support. Okay, so except for Amazon, another example is Pinduoduo here. Pinduoduo is another stock, another Chinese company stock. Is currently very hot also. It do something on online marketplace. So similarly, EMA 20 green, 50 red, 100 blue, 200 purple. You can see the stock price here is on an uptrend, and the stock price from April to August, right? Around August, it simply follow EMA 20. So you can see the arrow that I'm pointing. It comes down, go up, come down, go up, come down, then it consolidates here. So from this point onwards, right, it breaks through EMA 20. So it finds the next support level, which is EMA 50. So EMA 50, it seems like it's supporting, it goes up again, come down almost to 50, goes up again, then come down again. All right. Then from this point onward, you can see the trend line is no longer that clear. Remember, I tell you that when 20, 50, 100, and 200 line up sui like this, 20 on top, then followed by 50, 100, 200, it's a good uptrend. You know that the price is going up, all right? It's on an uptrend stock. But when you see the lines crosses, you can see that the green line now crossed down. It gives you a potential reverse signal, all right? You can know that the price might be coming down short term in a downtrend, and we'll see does it forms a support or not, all right? So from this point onwards, it's not so clear. If you have conviction, you think this is a discount, Great Singapore sales on your stock, okay? It's a potential time for you to shoot your bullets if it forms a support, all right? You don't want to catch the falling knife. When you see the price consolidating on certain levels, you are confident you can take shot, right? So after this, right, you have your EMA 20 support trend line, okay? So you can see after this downtrend, right, the price moved back up again. And again, it aligns nicely, 20, 50, 100, 200, and the stock price again follows EMA 20. So this is Pinduoduo. Okay, everyone good on MA? Is your brain fried yet? Because I'm going to move on to the next indicator, which is called RSI, Relative Strength Index. All right. Any questions on MA? Moving average. I'll give you. Thanks, Anyang. Okay. All right. So I'll move on quickly on the next indicator, and hopefully we'll have some time to do more hands-on at the end. All right. So indicator number 2, which is called Relative Strength Index, or in short, RSI. Okay. RSI, this indicator, right, is a momentum oscillator. So it means that this indicator will travel like a sine wave. Go up, come down, go up, come down, go up, come down. And what it measures, it tells you the velocity, how fast the price spike up or spike down. What is the magnitude of the price movement? Say today up 10%, come down 5%, and you'll see it very significantly up and down in RSI. Okay. Relative Strength Index, layman term, it tells you is the stock on a good strength? Does it have a strength to push it up, or does it have a strength to push it down? Okay. Momentum, calculate the rate of the price up, fall, or rise if you're interested. So what it really provides you is basically a range from 0 to 100. So if you have a RSI that is very close to 100, means that it almost reached the max already. It can't really have a lot of potential to push it further up. So when the value of RSI is too high, right? Let's say over 70 or over 80, it tells you that the asset is actually overbought, right? Too much buyer buying in. So right now is at a potential resistance already. So it might retrace, sorry. So when the value is too low, right? So let's say RSI right now is at a bottom, let's say less than 30, less than 20, less than 10, it means the asset is oversold. So people are selling this thing too quickly. So it signals that there will be a support forming very soon, and there will be a potential rebound. All right. So this is how we use RSI. So when it gives you a range from 0 to 100, when the value is too close to 100, you know that probably too much buyer already, you might want to wait a bit. But if it's too low, it will tell you, okay, maybe it's a good entry, provided it fits well with other indicators. All right. Don't rely solely on RSI. So again, example, I will take this stock, Alibaba, as an example how you use your RSI. All right. So ignore the stock chart, ignore the moving average, ignore the candles, ignore the support line draw, and really just pay attention at this bottom part called RSI. All right. So right here we can see four different price point on the stars. All right. So on the very top left, you can see RSI is breaking through. So RSI is very high at this moment, which is close to 80. And yeah, it will tell you that maybe the stock now is too hot already. It needs to calm down a bit. Okay. So yeah, as RSI plummets, stock price plummets down also. Okay. This is the first example on resistance. Again, another example, RSI is too high, pull back down, price pull back down a bit. RSI too high, stock price also too high, moving too fast away from MA, so it comes down. Okay, so RSI come down. RSI pushing close to 70. Yeah, this area is still can go up a bit, but then it comes down again. All right. So when stock price goes down, RSI goes down as well. Okay, so this is how you use RSI to tell that yeah, the stock is now too hot. It needs to cool down a bit. On the other hand, it can also tell you whether the stock is too cold and you need to heat things up. All right. So highlighted in green here will be potential support and potential rebound from your RSI. Okay. So first one, RSI is too low, and yeah, you can see that there are indicators showing you that price will go up, and you can see from these two green one also, RSI very low, almost pointing up, so stock price might move up. This one also potential rebound. All right. So you can see stock price is slightly moving up also. Yeah. Question from Mandy. RSI 50 equals to neutral. Okay. right? So to answer that question, right, let me move to my trading view. So we'll show you how to add the RSI indicator. All right. Similarly, this is the same chart we are seeing just now. So to add indicators, always come to FX. All right. Click on FX. We are adding RSI, right? So just click RSI, and I will use the first one, RSI, a relative strength index. So once you click that already, close this pop-up, and it will appear at the bottom. All right. So setting-wise, this is the upper band and lower band. Usually, I don't change anything here. I will just leave it like this, 70, 30. Input length, usually the most common way, people don't change this also. So RSI length is always 14, right? So don't need to change anything. Just open your indicator and RSI is here already. Yeah, does that answer your question, Mandy? RSI 50 equal neutral. I'm not too sure. Am I interpreting that correctly? Yeah, Mandy, you might want to restructure your question if you want to. All right. So yeah, before I answer that, you can just type in the group chat, but I'm going to move on for now. All right. So guys, after learning all these analysis and indicator, right? Very, very important. Technical analysis is only here to assist your entry or exit. Okay. Each indicator only indicates or predicts, but it does not give you 100% guarantee it will definitely go up or it will definitely come down. Okay. And never rely on one indicator to enter your position. Okay. You need to do your homework, which is fundamental analysis. To put it another way, right? Always do your homework on the company. Don't shoot your bullets solely on technical analysis. Okay, you will be subjecting yourself in a very high risk. And do not over analyze. Okay, don't pull a lot of technical indicators, make your chart look very messy, and yeah, it will only confuse yourself. Okay, don't analyze until your brain cannot take it. Okay, so that's why I'm teaching you the very basic technical indicators, like say candle for you to study. This is the most important one. Then if you want to know a flexible or updated say support and resistance level, you can use EMA. Right, EMA is a very useful tool, very powerful tool as well. And if you want more indicators to tell you insights on how much movement is the price going up and down, is it too hot or too cool, you can use RSI. Okay, and you can also use other indicators, but I'm not going to teach you that because this will already be more than sufficient for you to kickstart your TA. All right, so keys, keep it short and simple. All right, don't spend a lot of time on TA. Spend more time on understanding the company, understanding the fundamentals, even look into how the management point of view, right? Do they have a vision on their company's future growth? All right, make sense? Make sense? Type in 1, then I will move on to some recap on candlesticks next after this. Okay, if you make sense, type in 1. Yep, I'm seeing a question here from Mandy. Okay, so the question from Mandy is this: is RSI 50 equal neutral, right? Let's say 70 is overbought, 30 is oversold in a range 0 to 100. Then if RSI is 50, what does it mean? Okay, very good question. Usually RSI, right? How I use it, I only look at overbought and oversold. But if it's between, let's say it's fluctuate between 40, 50, then doesn't really give you a lot of information. It just tells you that, okay, it's either in a healthy buying in trend or healthy selling trend. It doesn't tell you that the price is moving crazily up or down for that moment. Okay. So RSI 50, around 50, you can say it's neutral. So nothing much to see from RSI. Unless it's overbought or oversold, then you can say something, right? Like overbought, okay, potentially there will be a price retracement. Oversold, okay, potentially there will be an opportunity to fire off your bullets. All right, make sense? Does that answer your question, Mandy? Okay, Zipei, is RSI relative strength to S&P 500 market? Good question. This one I might need to dig back up again, but I'm not too sure about this one. but RSI basically tells you how hot or how cold that the stock is currently at, all right? Relative strength to S&P 500, if I'm not wrong, right, RSI is different from relative strength. It's different, okay? Relative strength is another thing, which I haven't covered yet, and I didn't explore myself, okay? So Zipei, you can update in the chat in a while if I made some mistake here, all right? But yeah, RSI is different from relative strength. Mandy, okay? Looks like you understand, all right? If no question, I will pop in again to do some recap on candlestick and I will teach you some important things to look at candles, all right? Candlestick, for those who miss it in the earlier session, candlestick tells you four important information, all right? OCHL, open, close, high, low. And the body gives you the idea on open price and close price, all right? Green candle price is going up, so open is always at the bottom and close higher. Red candle, vice versa, opens higher, close below. And the wick is the tail. It gives you the highest price of that day, lowest price of the day or the given time frame. Color, green is going up, bullish, if it's red, right, it's bearish, so price is going down. And each candle represents one defined time frame. So you know how to read the candles already, right? So there are a few candlestick patterns which are important to let you know whether this candle is telling you or signaling you a potential reverse or a potential trend or not, right? On the left box here, which I'm pointing, we call this dodgy, but you can just interpret that this candle here is very dodgy. It's not going to tell you anything. It tells you that the buyer and seller is they are battling, all right? But then they can't make up their mind on that given time frame. Is it going up or going down? So when you see a dodgy, right, it's very important for you to observe the next candle. When you see a dodgy, if next one is a very strong green, right, it tells you that, oh, okay, maybe buyer win this war. If it's very strong red, it tells you that, okay, maybe seller is winning. All right, it's very dodgy. So when you see dodgy formation, it's a very dodgy candle. Spinning top means that, again, it's battling between buyer and seller, but then somehow one of it takes up advantage, all right? It has a margin. If it's green, means that buyer is a little bit better than the seller. If it's red, means that seller sentiment is a little bit more than your buyer. So when you see a bullish green candle, full green candle, you don't see any tail at all. It's a very strong bullish case, all right? If you, on the vice versa, if you see a direct red candle, very big fat red candle, it means it's a very bearish case. Hammer and hanging man, as well as inverted hammer and shooting star, I will explore these four with you, all right? This four is a very good signal for you to tell that price is reversing from a downtrend to uptrend, or from an uptrend trying to come down as a downtrend, all right? So these are just some examples on candle patterns. Candle patterns, very importantly, you can use one single candle to tell the price movement. You can also use double candle to tell a price movement. Or if you are even more advanced, right, people will start drawing candlestick patterns based on multiple candles. Say a head or shoulder, a triple top, yeah, but all that I won't cover today, okay? Too much information already. So candle double stick, very importantly, just focus on the two on the left, right? Bullish engulfing and bearish engulfing. Bullish engulfing means that the bullish candle, the green candle, is longer than the previous red candle. Means it engulfed the whole previous candle already. It tells you that buyer signal is very strong compared to the previous day or previous hour. On the opposite side, bearish engulfing means that seller is dominating the buyer already. Okay, so this is how you interpret the candles. And right now here, I want to show you 4 examples on how you use candle patterns to tell whether is there a potential reversing signal. Okay, if you see a price going on a downtrend, right, how you know whether it will potentially rebound back. And very importantly, there are 4 examples here, 2 bullish and 2 bearish. So first, this is a bullish reversal signal during a downtrend, right? When you see a long lower shadow candle, it's a potential reversal to uptrend. Potential, I say potential, okay? So this one highlight here is called a hammer. So to verify the reversal, right, always check the next candle, okay? So what I'm saying here is this: when you see a hammer here, it serves as a indication, all right? It indicates, okay, maybe we are going to see an uptrend, all right? You can either enter here or you can wait for the next candle to serve as a confirmation. So indication, confirmation, all right? Very important. Indication, if you're very gung-ho, you have your balls, you can enter. If you are more skeptical, right, you can wait for the next confirmation to be a green candle, and it will tell you it's a potential uptrend, all right? So yeah, this is an example when you see a long shadow at the very bottom, all right? So price is going down, then suddenly you see a green hammer here, then confirms again with a green candle, so stock price will be potentially moving up from this point onward, all right? This is the first reversal case. Second reversal case, right? During a downtrend again, when you see a long upper shadow candle, right? Means the hammer previously is like this. Now the candle is like this, okay? But it's green, It's called inverted hammer. So it's also a potential reversal signal. Again, it only indicates potential reversal. To confirm whether it's a reversal, check the next candle for confirmation, all right? So these are the two potential bullish reversal. On the other hand, let's look at bearish reversal. So if your stock is very hot, it's going uptrend forever, then what are the things you want to see to know that, oh, maybe the stock is hitting a resistance already, it's going to pull back down. So importantly, during an uptrend, right, when you see a long upper shadow, so this is called a shooting star. Basically, it's the same pattern like the previous one, which is inverted hammer. But if you see an inverted hammer at the top, right, and is in red, then it will show you a signal that, oh, okay, it probably hit the resistance already. Then it's going to come down like a shooting star. And this only gives you indication, again, to confirm, look at the next candle. The next candle always show you the confirmation, all right? So to know whether is there a reversal, first, look at the first indication candle. It will give you indication that stock price probably will come down or go up. But to confirm your thesis, right, look at the next candle to confirm what you are thinking. All right, very important. Bearish case reversal 2, when you see a hanging man, again, it's on an uptrend. Then suddenly you see this hanging man. It signals you that price is probably going to come down for a while. All right, again, red candle on the next serves as confirmation. And very, very importantly is this, guys. Again, I want to stress this. Technical analysis with all this I've covered is only here to assist your entry or exit. Do not rely solely on them to fire your bullets, all right? Always do your homework for all the TAs you are going to do, and keep it short and simple, all right? Don't spend a lot of time on TA. Spend more time on fundamentals, spend more time understanding a company business, understand who you are investing to and what they are doing to grow your money, okay? This is more important than all the TAs that I taught you just now. All right, here's a recap on everything we covered for the past 1 hour. So candlesticks, again, show you 4 information, OCHL, right? Open price, close price, the highest price of the day, lowest price of the day. Support and resistance is basically just the floor and the ceiling, all right? Floor is potential, you can jump up. So it's a potential price level for you to rebound. And resistance is basically the ceiling, all right? It's potential level for the price to fall back down, all right? So it will tell you it's a good entry when the price is close to support. It's a good exit point when you are trying to close a position at resistance. Trend line, again, it will tell you whether the stock is going up, the stock is not going anywhere, it's just going sideways, or stock is coming down, all right? So uptrend, sideways, downtrend. Moving average gives you a live update on what is the latest support and resistance and whether the stock is going up, going down, moving sideways, all right? So moving average is a combination of updated support and resistance as well as price moving trend line. And I also taught you another indicator which is called RSI indicator, relative strength index, and it's different from relative strength, okay? If you want, you can look up more on relative strength. I didn't cover that for myself. So RSI indicator, it will tell you, is the price too hot? Is it overbought? Is the price too cold? Is it oversold, right? If the RSI value is not going anywhere, let's say it's just moving close to 50, 40, 60, whatever, right? You can't really interpret much. I will only interpret when RSI exceeds 70, means overbought, or RSI below 20, 30 means that oversold, right? So it will again assist you with your MA to know that is that a strong entry point or is that a strong exit point? Also, lastly, I also teach you some of the useful candlestick patterns that you can observe from the stock price to tell whether is it a potential reverse trend on your company again. And when you see an indication, is there another second candle to tell you, okay, what you think now, confirm, go, green light, or what you see, no, cannot, the price is coming down, okay? Very important patterns. And with all this that I taught you now today, right, you can basically kickstart your TA on all the companies in your watch list already, all right? This is more than sufficient for you to fire your bullets, for you to have confidence to know what is a good entry, how to buy, how to start your position, and when you want to close a position, what are potential price level that you can aim at, all right? So this is basically everything that I'm going to teach you on paper today. So this is just a very quick recap, all right? I covered this on the previous session. So for investing, right, very, very important, follow these 4 essentials. You can play around with this, but this is the 4 that I believe is very important. Always do your fundamental analysis to understand how strong a company is. And after you found your list of company already, you can perform TA, which is what we covered today, to know what is a good entry, what is a good exit. And next off will be portfolio allocation, right? When you know when to enter already, how much money are you going to enter for the position? And that is covered in portfolio allocation, all right? This is very depending on individual, but a good guideline is that don't put a large portion of money into one position, all right? Always split into different bullets. So when you see a stock price come down, you can probably shoot, say, 30%, come down again, shoot another 30%, come down again, shoot maybe another 30 or 40%. So you will have price at multiple levels. You can potentially protect yourself if the price keep on falling and you don't shoot everything at once. Then when the price keep on coming down, you don't have more bullets to buy for a cheaper price, all right? And lastly is investment strategy, all right? This, everyone needs to come up with their own thesis on their own strategy, how you are going to invest, right? What is the target return you are looking at? And it's very depending on individual. Everyone have different risk appetite. Everyone has different reward they are looking at, all right? So what I provide you is fundamental analysis and technical analysis to kickstart you with the next portfolio and investment strategy, right? Really, you need to come up with it. It will help you a lot in your investment journey, okay? So any questions before I jump into the bonus session? If you don't have, type in bonus in the chat room, all right? So we will kickstart our bonus session very quickly. We have a few bonus today. First bonus will be covered by me, and second bonus, I will invite someone here to provide you with more presence and more reward for attending today's webinar, all right? So if you are clear with what I covered for the past hour, type in bonus, all right? Type in bonus, then I will jump straight into the bonus session, all right?